stocks are collapsing around the world. That's our top story today on the Wall Report. I'm your host, Greta Wall. The Moscow Stock Exchange remained shut down today for the fourth day in a row, but Russian-linked stocks in other countries are continuing to crumble. The London Stock Exchange has suspended trading in 27 Russian-linked companies today. Now that includes Russia's largest lender, Sberbank, and energy giant Gazprom. And here in the U.S., Russia-linked ETFs are continuing to plunge as well. The VanEck Russia ETF is down nearly 20% in today's session, but the fund has plummeted nearly 80% year to date. Now, meantime, oil prices are dropping after spiking to the highest levels since 2008. West Texas Intermediate crude futures are trading around $109 per barrel, with Brent crude prices above $112 per barrel. But U.S. oil prices had surged above $116 earlier this morning, and that was the highest again since 2008. But prices have stabilized after news that the U.S. and Iran may be close to finalizing a revised version of the Iran nuclear deal. And that agreement would reportedly allow Iran to export more oil, which officials are optimistic would help offset supply shortages from Russia. And although oil prices are stabilizing, other commodities are still surging. Wheat futures hitting a limit up for the third straight session, with trading halted at $11.34 per bushel. Remember, Russia is responsible for 17% of the wheat in the world, with Ukraine exporting a total of 12% of the global wheat supply. Corn futures are also jumping today, up nearly 5% to 760 cents per bushel. Now, the major indices are all lower as the volatility in the oil market spooks traders. And Wall Street is also focused on the Fed as well, with Chairman Jerome Powell testifying in the Senate. Powell delivering his semi-annual monetary policy report to the Senate Banking Committee today, a day after testifying in the House. Now, he's told both committees the impact of the Ukraine war on the U.S. economy remains uncertain, but the central bank will move forward with rate hikes starting in March. Powell has also left the door open for larger rate hikes this year if inflation does not follow the path they're anticipating. And we'll get the latest reading on inflation with the February Consumer Price Index set to be released 1 week from today. And earnings are still in the spotlight as well. American Eagle Outfitters shares tumbling about 12% after a profit warning due to rising freight cost. Now, the clothing retailer reported Q4 earnings of 35 cents per share on $1.51 billion in revenue. And that was in line with analyst expectations on both the top and bottom line. But the company forecast operating profits between $550 million and $600 million this year, which would be lower than 2021. American Eagle also warned earnings will fall in Q1 compared to a year ago. Now, meantime, Best Buy shares are rallying nearly 9% despite a Q4 miss. The electronics retailer reported adjusted earnings of $2.73 per share on $16.37 billion in revenue. Now, those earnings were in line with expectations, but sales did fall short. Best Buy's annual revenue forecast was also short of projections, but the CFO was optimistic for growth in the future. He said the company is expecting short-term headwinds, but demand will surpass pre-pandemic levels later this year. Best Buy also hiked its quarterly dividend by 26%. Victoria's Secret shares, meantime, are also up, rising about 3% after an earnings beat. The lingerie retailer reported earnings of $2.70 per share on $2.18 billion in revenue. That beat expectations on both the top and bottom line. The company's Q1 forecast was weak, though, citing supply chain issues, high inflation, and, quote, the potential for consumer uncertainty with the recent global unrest, referencing the Ukraine war there. Meantime, Snowflake shares are tumbling nearly 16% after the cloud software company said it expects growth to continue slowing. Snowflake reported a Q4 loss of 43 cents per share on $383.8 million in revenue. Now, that beat analyst revenue expectations, but Wall Street was focused on guidance. Revenue grew 101% year over year in Q4, but that was down from 110% growth in Q3. And Snowflake said that revenue growth will come in between 79 to 81% this quarter and projected 65 to 67% growth for the full fiscal year. So that's a continued slowdown each quarter throughout the year. Now, a quick look at the economic data of the day. Weekly jobless claims falling more than expected. Labor Department reporting that 215,000 Americans filed initial claims for unemployment benefits last week. That was down 18,000 from the previous week and better than economist expectations for 225,000. It also marks the lowest total since the week ending December 31st. Continuing claims, meantime, did rise slightly by 2,000 to 1.48 million versus expectations for a drop to 1.42 million. Now, the February jobs report will be out at 8:30 a.m. Eastern tomorrow morning. So be sure you are subscribed to my Coffee with Greta newsletter to get all the details right in your inbox at 9 a.m. There's a link in the description box to sign up if you haven't yet. And we'll also, of course, be breaking it all down here on the Wall Report at noon, so don't miss it. Be sure to hit that subscribe button and the notifications bell before you go.